Good news is you're not broke. You're just being taxed wrong. So every year, business owners lose thousands of dollars, not really understanding the difference between a deduction and a tax credit. So I'm going to show you how to stop overpaying when it comes to taxes. For those of you who don't know me, I've not only built several businesses, but I've helped hundreds of others really scale to that seven-figure mark and find ways to not only make more money, but make more profits by saving in areas like taxes. And one of those situations is talking about the difference between a tax credit and a tax deduction. So let me give you an example. So I had a client who went out and bought this beautiful computer setup, right? It was a desktop, beautiful modem, big screens, and it cost him somewhere around $5,000. So he thought because he spent $5,000 on this computer, he was going to pay $5,000 less in taxes. In reality, he only ended up saving somewhere around $1,000 in taxes. So what really happened? And this is where most people get tripped up. So a tax deduction basically reduces your taxable income. You can think of this as like an expense that will affect how much you profit, whereas a credit actually reduces your tax bill. Think of it as you owing $10,000 and then getting a discount on what you owe. So let's actually do the math and see how big the difference is. So let's start off with the deduction. Okay, here in the US, we're based off of a progressive tax system, all right? What does that mean? So the first $10,000 I earn, I'm taxed at 10%. The next 30,000 or so, I'm taxed at 12%, and so forth and so on. So let's say that we've earned $100,000. Now for us, it's basically between 50,000 and 100,000. We're being taxed at a rate of 22%. So we make this $100,000 worth of income, and then we have a $5,000 deduction. Now we take away this $5,000 and we still fall within this 22% range. So really what we end up saving is 22% of the $5,000 deduction, which really equates to $1,100. Now that's not bad. I mean, we want every savings that we can get, but now let's look at what a tax credit would do. So let's say after it's all said and done, we actually get the physical tax bill and we owe $5,000. But then we get a tax credit, and that tax credit gives us a value of $5,000. Well, now our effective tax bill, what we owe, would be zero. It would be completely wiped out because the credit directly depletes the tax bill itself. Now imagine being armed with this knowledge and you start stacking the right credits. Not only is it going to save you a bunch of money, but it can help you out tremendously when it comes to cash flow. So when it comes to deductions, think of your standard business expenses, office supplies, insurance premiums, travel, software, and so on. All of these things are taking away from your profitability, right? So you got your gross income, you take out these deductions or these expenses, and then it gives you what is left over as your profit. And in this, for the sake of this video, we're going to call that our taxable income. Okay, so now it's reduced our tax liability, but now we can see what type of credits do we qualify for. And guys, there's a ton of different credits out there, and there's all different types of ways to qualify for them. And not everybody is going to get a credit, but there's credits for hiring veterans. There's credits for going more economically friendly, going green. There's credits for research and development. And there's also a credit during certain times for employee retention. So matter of fact, we actually helped a client get back $78,000 from a return where they missed out on a credit. In this specific instance, it was the employee retention credit. The employee retention credit happened during 2021, during the pandemic, and essentially it said up to 70% of qualified wages could be given back as a credit. And this was huge at the time. A lot of people missed that opportunity in that moment. They filed their tax returns, but they didn't necessarily take advantage of the credit. So when we saw this, we took the opportunity to amend this specific client's tax return, and we got back $78,000 for this individual. That's massive savings. So the question is, how do you know which credits actually work for you? And the answer is really easy. You can simply just reach out to a tax pro, or at a minimum, here's what you can do. You can research by industry what credits are actually available. And credits, like I said, they differ. There's a wide variety of them. So as you're researching them, also make sure that you're tracking your expenses, all right? And then you actually separate the concept or the idea of expenses, like spending money, versus strategy, okay? For example, we could get specific health care for our employees. Well, some health care actually qualify for credits while others don't. So instead of just spending the money for the sake of spending the money, why don't we put a little bit of strategy behind it and make sure it's a good quality product for our employees, but we also get the credit or the benefit at the end of the day. After all, the right financial move isn't just about saving money, it's about building wealth and doing it smart. Tax season shouldn't feel like a roulette. You shouldn't feel anxious or stressed out. Instead, you should have a strategy and be able to apply it so you know proactively what's going to happen. And if you're ready to take control back over your finances, be sure to hit the like button and subscribe, because let's face it, you deserve to keep more of the money that you're working for. And if you want to reach out to us directly, you can always do that in the description below. But as always, thanks for watching, and we'll see you in the next video.